Hello and good morning. Welcome to day 2 of the pop-up SSBCI Best Practices, Innovative Strategies, and Inclusive Entrepreneurship. My name is David Rickster, CEO of M Street X. We had a really powerful conversation yesterday. And before we start on the track for today on inclusive entrepreneurship, I would love to hear from all of you on what you heard on SSBCI Best Practices for 1.0 and also innovative strategies. That being said, I'm going to open up the conversation, and the states that are currently participating here at the Bioinnovation Center and also online, please feel free to chime in so we can just have a quick couple of minutes to have a conversation on what you all heard. If we have no volunteers, I'm going to pick on Steve, because Steve is always ready to share. Good morning, Steve.
I knew you'd pick on me. So. How are you all doing this morning? I wish I was able to come down. I think that a couple things that were really helpful for me is confirmation of some of the things that we've done in the past that work, and hearing from other states. And it's always good to when what you're doing and what other states that are best practices are doing are in alignment. And so that was encouraging to me. I also it was also interesting though to discuss what could be new innovative strategies, and I look forward to talking about that again today as we share later on in the program. But I do think that that we need to press the envelope a little bit, not obviously on anything that requires auditing issues with the Office of Inspector General. But I do think that as we talk about inclusivity today and things, that we do need to kind of come to this knowing that if everything was working right at the federal level with programs on inclusivity, we wouldn't need to be having this discussion. And so I think kind of the admission that the federal programs aren't working completely, and that we need to be the people pushing to get them to work in different ways and disrupting the status quo. That's kind of what I got out of it yesterday.
Very good. Anyone else want to share or have comments? Cheryl, welcome.
Okay, I'm unmuting. Good morning, everybody. I wanted to share how beneficial the pop-up conference has been for me, being that I'm less than 30 days old in my new role. And I heard some great best practices involving surveying your state to find out what would work well. And also not being in such a hurry to jump out there first and foremost. It's okay to establish a professional learning community and see what other states are doing. So some of you I've reached out to by LinkedIn, and I have some more contacts to make. But I also want to state how beneficial it was to hear the question, what you would not do. And of course, that's making the process overly complicated. Make it easy so that partners will want to join and be a part of SSBCI. I took quite a few notes from Carmen West, so it was great that she was on the call as well. And I became knowledgeable about the very first ever minority business development agency that launched today. Actually, their event started 18 minutes ago. So I won't be in two places at one time. I'm going to try to devote my energy to you all today. Yesterday, it was board members who wanted to be a part of, informing the process, and potential stakeholders. So reaching out to venture capitalists, very small business owners. I'm just really looking forward to doing the work and doing a good job for Virginia. And the presentation by, I believe it was Tim of Georgia, was excellent. Tim Smith, it was, I mean, it was just great to hear him walk it down. So we definitely will be contracting with CDFIs. I will be at their coalition meeting on next Tuesday, I believe it is. So a lot of the information that you all presented permitted me to reach out to persons in my state who hold some of those positions and see what would work. So, you know, reaching out to our state venture capital firm. I believe I'm saying that correctly. If I'm not, please forgive me. But we're reaching out to them to do the work of deploying funds for us as well. And meeting with the Virginia Bankers Association. So we're right in step with some of the best practices I heard. And I really would love to get a closer look at CAT, but hopefully it would be with the Treasury so we can easily get access to that. I spoke with my chief accountant manager and I told her about InStreetX and she was like, wow, that sounds fabulous. So I will be looking up that information. I hope I haven't taken too much of your time because it's a pleasure to be here.
Thank you kindly, Cheryl. Appreciate your comments. Anyone else before we jump into inclusive entrepreneurship? I see we have Mississippi, folks from Nevada. I think I saw Tim earlier from Georgia. And of course, in the house, we have Louisiana Economic Development. Good morning, ladies. Any comments from yesterday? Oh, no.
One of the things is that it was really, really great to hear, you know, even though we had existing programs and looking at listening to some of our other colleagues around the country and talking about what they did to improve their programs. I was real encouraged when Steve said that, you know, they were looking at 10 programs. And Steve, I may have to call you on that to get some ideas on some additional programs. But one of the things is that whatever we might settle on and within your state, Treasury still is going to give you that flexibility to change. So, and over time, that's one of the good things. We are reminded of that. And I want to say to Cheryl, you know, I'm glad you reached out to the group because they are really sincere. We are embarking on a new program in Louisiana. We haven't the slightest idea, you know, what we're going to do about it, or when we talked about it. And we've reached out to Corey Phelps in Idaho for our collateral support, and there'll be others that we're going to be reaching out to as we develop what we're going to do. So it's not just a lot of talk, you know, these guys are really sincere about making sure that not only their programs are successful, but everybody who is included in and working with SSBCI is also successful. So,
and I think what you just said right there is extremely important because SSBCI, yes, it's a program, but what came out of it is a community of practice.
Correct.
And so that community is extremely powerful. So to the extent you can leverage it, then you're able to really understand what those challenges are, but also identify where there's opportunities as well. Anyone else before we jump in? I want to give you time to chat, have conversations. All righty. Well, then let's jump right in. So I'm super excited that we have the opportunity to hear from Sandy Moore. Sandy Moore is the Chief Impact Officer at Advantage Capital. We will also hear from Kevin Dick, who is the CEO of the Carolina Small Business Development Fund. They will talk about inclusive entrepreneurship and impact investing. Sandy.
Thank you, David, and good morning to everyone in the room and everyone who is joining us virtually. It's a pleasure to be here. It was lovely being here yesterday and hearing all the ways that we have both done SSBCI 1 and learned from it, and then the energy around what we'll do for SSBCI 2. Is my slide up there?
Yes.
It is. Okay, good. Now, to the audience, let me explain something to you. This is going to be a little bit of a deal here with me, Sandra Moore, moving the slides in two places. So let's see what happens. I want to start with the title slide because every word matters in that title slide. And let me step back a bit and say, for those of you who were here yesterday, you heard my partner, Michael Johnson, introduce Advantage Capital, but just a quick reminder that we are a 30-year-old growth impact investing fund, private equity investing fund. We invest all over the country, focused on distressed urban and rural areas with an array of products that really meet the entrepreneur wherever he or she is in their funding needs. Impact is what we do profitably, and that is our company. About $3.5 million in assets under management, around 300 investments on any given day is our book of business. As the Chief Impact Officer, I am I'm laser focused on, are we meeting, but the standard that we reach for is exceeding the both economic and non-economic returns that we commit. Now, I work with an extraordinary group of investment and finance professionals. That, however, is not my lead background. I am a social scientist, and I overlay looking at what actually works when you invest to drive change, and being able to chronicle that, being able to review and analyze the data on that, being able to mine that data to drive our next set of investment decisions, but also to tell all of our investors who are expecting both financial and social returns what they are getting. So that's the work that I do every day on the team with Michael Johnson and others. We're a big firm in this space, 125, 130. You know, every day the number changes. Sometimes they tell me it's 140, but somewhere in there, less than 150 and more than 125 is where we are all around the country. Now, back to today, and thank you, David and M Street X, for giving us time to present. Every word on the introductory slide matters. I think for us at Advantage and for framing when we're thinking about what we're going to do in 2.0, I think precision in language is important. So what I've said here is targeting success, targeting SEDI, because ultimately, at this moment in history where we're getting more money flowing to really attack areas that have been starved, if we are targeting success, then we've got to target social and economically disadvantaged communities. And we have to use this opportunity to provide the tools for social and economic inclusion. I know I'm speaking to the choir, but there's a reason for that particular framing. I'm gonna go to the next slide in two places. Let's see what happens. Nothing. That would work. Now hang on. Look at that. So I think it's important to define success. And so in getting ready, I had wonderful help. Michael and I both did from Chloe Canaris. You see her name up there at Advantage. She did a lot of research digging in to find out what happened with SSBCI 1, because we weren't a big player. Advantage wasn't in SSBCI 1. And that was unusual for us. I'm in Michael's space, but he said it yesterday. We weren't a big player, and building and deploying incentivized funds is what we do. So it was unusual for us not to be in that space. But Michael and our Chief Investment Officer, Scott, decided that there was just frankly too much uncertainty in the space to really, and not a lot of money to run around with uncertainty. So we weren't in that space a lot. So this time around, with such a new push, we thought we would think about entering this space. And that's why we're here with you all kind of exploring. But from the Chief Impact Officer's perspective, you've got to really define what does success look like at the very beginning. So we know, and Chloe did a lot of research about what happened in one, and is if I stand on a mountaintop, I'm not, I am an investor now, but that is not the first frame of my thinking. So I can go to the mountaintop and say, when I read all of this stuff, this is what I saw. That defining success early on was growth, some kind of growth, jobs, wages. And when I skip words, it's because I'm going to come back to them. And success was defined as access to capital. And there was some success defined sustaining that access once you opened it. And that was what I could see from 1.0 were the main markers of success. And standing on that same mountaintop now, I would say we've got to look at wage progression in addition to growth and jobs and wages, because investing so that wages increase over time really ties to the last thing, sustainability of the approach. When we talk about access to capital, we might really want to pay attention to follow-on capital. Several of the states have done that, and I heard them talking about that. But as we move into SSBCI 2, we maybe should really think about that, because that really goes, not maybe should really think about that. That sounds very equivocating. We definitely should think about that, because that goes to overall community vitality. Money in, money out, maybe it's coming, maybe it's not, maybe there's access, maybe there isn't. That's not the way the big capital driving communities operate. It is a given that there is going to be access to capital. So if in fact we're going to sustain, then we have to talk about that follow on and how this thing continues. And then the one that I didn't say anything about with regard to 1, and that I'm back at on 2, is I was really shocked, and there's probably much that I missed, but I was really shocked that I couldn't find that there was a lot of conversation with entrepreneurs about what they wanted to achieve. And I think that's really important this time around, that there really be in defining success. Success has to look like, what does the array of entrepreneurs we seek to invest in and we seek to grow to attain all of the overall success? What do they want? So here we go. We're going to flip slides again and see what happens. 1, 2. The other thing in looking at the research, it showed up over and over again in various studies that it was very hard to track, to count, to measure, to know. States, or as creative entities that we all are, had different definitions for what was a job and what was a wage, and what would a wage be connected to. There's nothing unusual about that. That exists so much in government programs. On one side, I love it because it keeps me with a job, because all my team wants to know, well, what does job mean in this state, Sandy, and how do we make that work across the 52 other states? You know, I added a couple that we're going to work in. So, but in this time around, out the box with this much opportunity, there are some observations I would push for SSBCI 2 from the impact side. Let's get some mandatory and specialized outcomes and work from results backwards. What is it we want? How many CDs do we want to grow? How much do we want to see overall growth? And work backwards with some, I know people hate the word mandatory, but if you don't have something that everybody's got to count, then everybody's counting anything. And then we're back into the ball of confusion. And then some specialized outcomes. And those maybe can vary from state to state, but I would really urge that, because then we all understand the framing and it keeps us on track. Not too prescriptive, anybody from Treasury who's on here, not too prescriptive states if you're going to engage with private managers like Advantage Capital, and I hope that some of you all will do that in the array of things that you're going to choose. But enough framing that people at least know that everybody's playing baseball and not half of us are playing soccer and another part are playing basketball. Make the metrics make sense. make them tie to something. It's what I frequently call in the impact world, let's not count widgets. Jobs matter if in fact those are jobs in your state, in your county, around the outcomes that you are seeking. Jobs overall, universal jobs, doesn't matter. I'm not answering the question. I'm simply asking that metrics make sense, again, mandatory and specialized, against the outcomes that you really want. For instance, what are we going to do about investing in jobs that are part of the gig economy? Do we want to exclude growth in that area? Those are state kinds of questions. And then whatever your answer is, your manager or your team, if it's internal, or your group of partners, if it's your state-bound partners, understand what it is, the outcome that you're seeking in that very new place in this economy. And then the last thing, and I missed the headline, what we count must be linked to the outcomes you see. But you see me talking about that. And the last thing is, we have to get into a conversation with those entrepreneurs and really understand what are metrics that matter to them. That is one of the things that we do at Advantage that I sort of started, and I didn't realize, backed into it actually, trying to get people to answer our surveys. And the survey response rate, we survey our portfolio companies twice a year. And the survey responses were slow in coming, and it frequently felt like hen's teeth, and you didn't want it to feel repressive and all, at least I didn't want it to feel repressive and all of that. And Michael is also the chief compliance officer. I didn't want him banging in my ear that we couldn't meet the state reporting requirements because we don't have the data. So I started doing a compilation by industry of the results from the surveys and sending them out to our board codes. And I'd send it with a really happy email that says, you're some part of something larger. Here's your industry infographic. It was unbelievable how responsive people were to that. And it just hit me. You ask people these questions year over year for 25 years, and you never tell them why the answer matters. Why would I answer? Oh, here they go again. They want to know how many jobs I had in the last 6 months. Hell, they know, they helping me pay for them. You know, that's the attitude, and they weren't responding. But when I wrote back and said, in your industry, you created 2,900 jobs in the last 6 months, new jobs, and the average wage was this, that, or the other, people were responsive. So it was the conversation with the entrepreneur that really helped to inform the data. They became much more responsive and all of that, but it helped to engage them in understanding why it mattered. And I would suggest with SSBCI too, that's really, really a thing that needs to happen. I hope I have another slide about something on this quickly. And David, give me the eye if I go on too long. I like my job. I can talk about it.
You're fine. You're fine.
Okay.
We have time.
Next slide. So maybe I should have said this at the last slide. I'm gonna go back to it. See what happens when you think you know how to do this. You get fancy. Did I go back? Yes, I did. This meeting the entrepreneur where they are, the new day. So there is some work that we are doing right now around some very targeted investing, like where I start here when I say 2.0 success equals SEDI success. And what we have learned is we thought we knew what small, and in this case, minority businesses wanted in terms of the ability to grow their business. What we have been finding is that we failed to understand that they want to, a few things we figured out. Small businesses want to grow big. They do. They're afraid to, they don't know how to, they haven't had the resource base. Again, I'm just talking about some recent learnings with regard to minority businesses. They don't have the historical context. They don't have the the will to take as many risks. They take a lot of risk, but different kinds of risk. So we were operating under assumption that small businesses didn't really want to become mega businesses. They want to do well in their space. We have found that that's not necessarily true. Small businesses want to create and pass generational wealth. We saw that in our small, particularly our rural business investing. These companies that are family owned, they do not want to lose it out of the family unless they change it into wealth that the family can then use in another way. But we were ignoring it in minority business enterprises. We just weren't thinking about it, that you need to structure the investments so that these MBEs, small though they may be, have the opportunity to pass on generational wealth. That's stuff that we know about. We want you to do exits. We can make money if you do that well, but we weren't thinking about it. So I was encouraged yesterday to hear, and again here this morning, I think it was Stephen who said, we got to push the envelope. We can't cut off the window of opportunity for CDs based on our view of what we think is the growth trajectory for small businesses, or the growth pathway for small businesses. There's many, I'm coming to understand, there's many a serial entrepreneur buried in that small business that can't seem to get $2 above their, above their breakfast cost. So that's all I wanted to say about that. It really was quite eye-opening to me. Again, I have pushed, and I believe that it is right when I read the research around 1.0, that we do what we count. If we can't count it, if we're not forced to count it, it's easier for us to forget to do it. But at the same time, and I saw that in the research, that this whole challenge of being able to count and measure and report. But I also know that counting must be made possible, because the entrepreneurs are running businesses. You all are running state agencies. We're running a private equity investment firm. Counting cannot be exclusively what we do. And I doubt that any of us, certainly the entrepreneur does not. The state agency may have more opportunity to have people who are just tasked with tracking, but here in the private sector, we don't have a very small team tasked with tracking. So these are a few of the observations that I would make. We need to try and have our counting be synergistic with whatever is in state reporting already. If state reporting already requires employees of a certain size or a certain kind to report data that is part of the outcomes that you are seeking, then let's make certain that we, in design of the program, make it plain that we can use that state report or the data from that state report in our counting. Make it easy. People are doing it already. Don't make them do it twice. When there are new metrics, when you're designing your program, if you design new metrics, and I'm hoping that there will be some new metrics, because that'll keep me employed. And the Advantage Capital team will keep saying, okay, Sandy, now how are we going to figure this one out? But seriously, I hope there are new metrics, because we need to be pushing the envelope on what success looks like. But then we need to build at the front end the interagency agreements and the inter-partnership agreements with our CDFI partner, for instance, to be able to share data. Guys, I can look up everybody in my family's health records on my chart. Yes, I make them all tell me their passwords and whatnot. Now, certainly, if we can get that intimate in the data exchange, we can get what data being collected by the State Department of Revenue and data being collected by the State Department of Health and Human Services to have interagency agreements, so that the investors like Advantage or the managers like Advantage or your state teams or your CDFI partner can get the information from the both of you at once, or from one of you that is good for the both of you. We can do this. And then I did talk about this earlier. Let's not shortchange ourselves, the state agencies, investment managers like us, investment teams, members like our CDFIs and all the people who are on this call who will put together teams. Let us not shortchange ourselves on what we're seeking to achieve. We won't, what did someone just said to me this morning? This is our new deal. I'm old. I know I won't see another slug of money come down the pike that is targeted in this way. It would be absolutely sinful for us to squander with short vision. Build out the pipeline, build it out. By that I mean, build out the pipeline of people that we play with, financial partners, our community partners, our outcome partners, because there are partners out there that don't fit a typical box, but whose set of outcomes are the same outcomes that you are seeking. They are out there. They don't have a bank name. They don't have a CDFI name. They don't have a credit union name. They don't have an investment vehicle name, but they have the outcomes that you seek. It's worth exploring that as prospective partners, because they know where the good entrepreneurs are. They know where the good deals are. They know where the entrepreneurs that are doing things that change communities are. And then in that, building out that pipeline, make certain that outreach, education, and sourcing is a part of what you want from these partners so that you get the broadest base of potential entrepreneurs who can be impacted by the investment strategy of 2.0 that you develop for deploying 2.0. And then this is my last slide, and it's sort of in where I started. Walking with CDs into success in this moment. Making certain that we understand the range of options, growth, succession. How do I sell this little business to my son so that he or my daughter, so he or she can grow on? Generational wealth. How can what's the investment strategy? What's the package that, if you think I'm not going to do commercials, you're wrong. What's the package that Advantage Capital can put together that will allow that firm in 3 years to exit, sell it to somebody, take the generational wealth and build the next wave? How do we support those serial entrepreneurs? Those ones who started in their kitchen, who moved it to a food truck, who moved it to a corner restaurant, who shut it down during COVID, who now have the next entrepreneur. Because they are small, they are still serial entrepreneurs, and we must create the pathway for that kind of impact. So I do believe that I am done. And thank you all very much.
Thank you, Sandy. That was powerful. Thank you. Thank you. I do want to take comments and questions, but let's wait till we hear from Kevin.
Sure.
And then we will open it up.
Thank you, David. And good morning, everyone. I'll wait for my slides to come up and try to be as proficient as Sandy here was in being ambidextrous. I'm not sure if I can be, but I'll try anyway. But really quickly, first and foremost, I want to thank a few colleagues in the room for making the connections that brought me here today. So although I represent a CDFI in North Carolina, very happy to have partnered with Louisiana Economic Development and my colleague Ann Villa, who I met almost a month, maybe a little over a month ago, who connected me with David. And so it went from knowing about the conference and registering for it to having a conversation with David and saying, hey, David asking me, hey, why don't you speak at the conference? And me saying, okay, it's a hybrid. Okay, sure, I'll speak. Well, maybe it would be great if you even came down here. And so, as with anyone, I always need a really good excuse to come to New Orleans. Actually, I don't. And really happy to be here this morning. Thanks to the team for bringing it up. So the title of my presentation this morning is Inclusive Entrepreneurship in North Carolina Through Innovation and Intentionality. Inclusive Entrepreneurship in North Carolina Through Innovation and Intentionality. And what I'd like to do is really 5 things. I hope to accomplish 5 things with this presentation. First of all, talk about what we are, really with an emphasis on the intentionality of policy in terms of how we were born really as an industry. Secondly, talk about who we are. Thirdly, talk about whose we are. Fourthly, what we do or what we've done, both in the aggregate and in terms of specific initiatives. And finally, why we are a good investment. And if you think I'm not going to sell my co-panelists on why we're a good investment for an organization like Advantage Capital, you're wrong, because I am. So, so CDFIs and why we exist. As David said earlier, I know I'm preaching to the choir, both in the room and virtually, so don't need to spend a lot of time on what CDFIs are, but I do want to talk about the impetus for them. So the initial impetus was the Community Reinvestment Act of 1977. Basically an act that finally recognized that through years of governmental and governmentally sanctioned and directed policy, as well as bank policy, that there were underserved communities being ignored and actually being consciously rejected in terms of the injection of capital into these communities. And so the CRA of 1977 helped to try to rectify that. But here was the issue. Even if banks had to lend a certain percentage of their assets in underserved communities, it still was not necessarily profitable for them to do that, right? And so that basically, that need created the birth of the CDFI industry, right? And then fast forwarding to 17 years, you have the Regal Community Development and Regulatory Improvement Act of 1994, which basically created the CDFI fund within the Department of Treasury and created the fund and funded it so that there would be resources to these organizations called CDFIs to be that conduit for banks. In other words, if a bank didn't necessarily, had to comply with this act, but it wouldn't be profitable to do so, essentially CDFIs could help meet that need. And so hence, you had CDFIs be created to help underserved communities develop and redevelop while helping banks, municipalities, and philanthropic organizations meet investment objectives. And so CSBDF, Carolina Small Business Development Fund, we're a 31-year-old North Carolina nonprofit. We have been lending for 11 years. We've been certified by the Department of Treasury as a CDFI for 8. We also, 2 other core pillars of our work are small business technical assistance and policy and research work. So what Sandy talked about so eloquently about the metrics and mandating counting and so forth. One of the things we've been working on a lot, and actually have an article published in the Community Development Journal about the difficulty of CDFI program evaluation. So you can, as my vice president of economic development likes to say, well, Kevin, I know we have to count widgets, so we will, but it's about more than the widgets. It's about the impact. And so how can we as an industry really measure impact? And that's really, it's a journey. We're by no means there. And I will shamelessly talk about some outcomes in this presentation, but we are on that constant quest to figure out how those outcomes have led to impact. And our partners are really across the board, other nonprofits, governmental entities, and for-profit organizations. Really, what we operate upon is, I told you I couldn't do this as well as you. But really, the basis upon which we operate is a 3-pronged approach that where economic development is, becomes really what we're coveting. Business lending, technical assistance, and policy and research. I'm blessed to have an awesome team, some of which I know, or a few of whom I know are tuned in this morning, but of a real, I guess, a variety of professional backgrounds and expertise. And so we do have bankers and lenders. We have nonprofit veterans. We have folks that have worked in microfinance and are operational, kind of operations experts. And I'm not a lender. I'm not a banker. I know our board did not hire me because I knew a lot about banking and lending. In fact, I've learned more about both since I started in this role. I'm a community and economic developer by training. So just as my co-panelist is a social scientist, really what I did for the better part of my career was work in local government for 4 different local governments in 2 states, really always trying to, with more or less with the lens on trying to get resources, whether they were through economic development, workforce development programs, administering CDBG, HIDA, all kinds of federal grant programs, and really trying to maximize the impacts of those funding sources for these communities. And so this position and this approach are very much germane to me personally and professionally, because it's really all about how we build wealth, right? That's the essence of economic development from a micro and macro perspective. But these 3 ways on the periphery are how we go about doing it as Carolina Small Business Development Fund. So what we've done in terms of historical impacts, the widgets, the outcomes, we've deployed over $82 million into the North Carolina economy. We know that we've helped to create or retain, based upon our job surveys, at least 4,600 jobs. And that's significant because a lot of the companies we work with, our sweet spot in terms of lending, we do loans between 5,000 and 250,000. Most of our companies have 20 employees or fewer. So when we talk about creating or retaining jobs, if we can help a business stay in business and maybe scale, and they add 2, 5, or 10 jobs, that's really significant. There are a lot of aspects of economic development. I've had the privilege of working in business recruitment and retention and small business growth and real estate development. And generally, in terms of, again, the counting, historically, we know in economic development, the counting has been about what? It's been about the smokestack chasing. Mm-hmm. And I don't mean to say that in a crass way, because chasing smokestacks is important too. But just as long as those can have impacts on your local community, where I have seen the industry evolving, and this is a very positive direction, I think, is in terms of tying all of those aspects of economic development together, so that when we bring in the big company, what does that mean for the local supply chain? What does the local supply chain mean for local jobs? What do local jobs mean for local expenditures? What does that mean for sales tax base? Therefore, a macroeconomic development impact. And then for microeconomic development of the household wealth growing. So that 82 million in investment and that job creation and retention has been important. We've done that through, actually, these numbers have increased even since I first gave this presentation, probably about a month ago. So we're up to over 1,100 loans and at about 1,000 grants that we provided to small businesses. And you can see the impact circles at the bottom. Our DNA is about really helping businesses and people in underserved communities. So of all of the capital we deployed, 57% has been to businesses owned by people of color or minorities. Nearly 40% to women-owned businesses, over 14% to veterans, and almost 50% to those who identify as low to moderate income. So really staying true to our credo. In terms of some things that we've done during the pandemic, and really when you do presentations like this, I think there's a strong impetus to have to talk about what we're doing right now to impact economies. And so emergency loans, I mentioned that we have a lot of governmental partners. And so we have partnered with Mecklenburg County, which is Greater Charlotte. We've partnered with Durham City and County, the city of Raleigh, as well as the state of North Carolina, historically underutilized business office and disadvantaged business enterprise office within NCDOT to do a lot of emergency lending and grant making over the past 21 months, really. And, you know, I'm a big football fan. So having worked in local economic development and local government economic development, I like to say that local governments are like the NFL. It's a copycat league. So just like the impetus for part of this conference, it's getting professionals in the space to share ideas and copy off of each other. Hey, it worked for you, I'll do it too, right? And so when we entered into an agreement with Mecklenburg County, the city of Raleigh noticed, and they asked us to administer a grant fund. And then because Raleigh and Durham are like the let me not say big and little brother because people in Durham will get mad at me. Oh, I just said it. Right, because the Durham noticed what Raleigh was doing. They said, well, we want a grant program and a loan fund too. But our charter doesn't allow us to do a grant program. North Carolina is a really interesting state. The way a city is chartered, how it ties with the state constitution will dictate if a city can do something. So because Raleigh's charters are written a little bit differently, they did small business grants. The city of Durham attorney said, no, we can't do grants. Our charter is not written like that. It doesn't mesh with the Constitution. So they leaned on what we used to joke about. Now that's too much inside baseball. They leaned on Duke University to basically have, who was creating a small business emergency fund for COVID. And so since the city and county couldn't do the grants, Duke kicked in $1 million from their $5 million to say, why don't you just give these grants to small businesses? We don't want to be at the forefront. Just please get this money out to small businesses, do it efficiently, don't embarrass us. And fortunately, the city and county partnered with us to do that. And we were able to get all of the grant funding out. Still working on the loans actually, but with the loans, I think that's an interesting story. A lot of these grant and loan programs started at a time before SBA had really rolled out PPP, really rolled out EIDL. So they didn't have all of the rules figured out. And then they were able to roll it out. And so it went from famine to feast for small businesses. There were no resources for small businesses that may have had statistics say 30 days of payroll when COVID hit. Some had even less, some 15 days of payroll, and there were no resources for them. But then by the summer of last year, there was, local governments in North Carolina, there was a state rapid response fund, there was PPP, there was EIDL, any other governmental initiative you could think of, and there were private sector funds, private sector programs, Google, Verizon, all jumped into the space. So that's one of the reasons why it took us longer than we expected to even get loans out the door, because of this, basically sea of resources that small businesses had to sift through. And I think that goes back to what you were saying, Sandy, because it's also about the technical assistance is so important, and figuring out helping small businesses and entrepreneurs to navigate the space. And that's one of the things I take great pride in us doing. So you can see some of the economic development stats, the loan support and payroll, tax revenues, the grants. But again, I want to go back to technical assistance again. In a COVID environment, you have to be virtual to be relevant. And so one of the things we did was really cultivate what we call our Digital Learning Academy. And that basically is a curated library of content that entrepreneurs can access 24 hours, 7 days a week, on marketing help, on things like using QuickBooks, basic business operations things they need to know in order to survive and hopefully scale. And still, as things have opened up, we tried to do one-on-one counseling and mentoring as we typically have done. So one of the things that really, we're not a depository institution. So we have basically no similarity to a bank other than the fact that we lend money. But one of the things that really helps us, that makes us stand apart from commercial banks, is that when the loan is approved, it's not, thank you, Sandy, your loan payment's due in 30 days. It's your loan payment's due in 30 days, and let's check in on your financial statements and really assess how your finances look every 6 months or maybe a year. Let me talk to you about what opportunities there may be in the space for you to develop your business. Because our thinking is, the more ways we can give our businesses opportunities to make money, the better their chances of doing what? Paying us back. Right. Which we need to have in order to make money too. So it's really advantageous in multiple ways. Also, really just the intentionality again. And I said at the outstart, innovation and intentionality. So the partnerships that we've had with local government, we never had those before. For the most part, we never had those before 2020. So we had to be innovative and kind of think on our feet. But we also had to be intentional about the groups that we wanted to serve through our efforts. And so I showed you some impact circles earlier, really showing, the percentages of our resources that had gone to specific groups. Well, in COVID, they became even more significant. So 60% of our resources have gone to businesses owned by people of color or minorities, 47% now to women. And what is interesting about both of those benchmarks is if you look at small firm ownership by businesses owned by people of color in North Carolina, it's 13%. 60% of our resources have gone to that population. 21% of small firms in North Carolina are owned by women. 47% of our resources have gone. And with veterans, we exceed the state percentage. With low income, those that are considered in poverty, 13% of working age adults, but 37% of our resources have gone to that group. I want to talk about some specific initiatives that we've launched over the course of our existence to, again, really be intentional. So this was our inclusive procurement training program. And the problem was that in the city of Charlotte, you had basically the different groups, groups of color or groups that have been historically underutilized, that had certain availability rates in the marketplace. What percentage of firms that could do work in whether, regardless of the commodity, construction, different goods and services and so forth. And so 11% of the firms in that geography were non-Hispanic, white women owned. You can see the percentages for the various groups. And then you can also see the utilization. And without fail, the actual utilization was even lower than availability. And the availability isn't very high either, right? So one of the things we want to do implicitly is we want to help businesses survive and help them scale so that this availability percentage can go up over time, but also provide them with the capacity so that the utilization can go up over time as well. In other words, we want these local governments to be able to feel comfortable, and state government and what have you, and feel comfortable in utilizing firms knowing that they can get the work done. And there may be implicit bias factors of why firms aren't used that we're not necessarily solving for here. But what we were trying to solve for in this program was trying to get more companies in the Charlotte metropolitan statistical area more equipped and knowledgeable about how to do business with the city, how to gain contracts, and then also really strengthen their businesses so that they not only knew how to do it, but were equipped to actually do the work and not have the contract put them out of business. Because we know sometimes with small businesses, that's what happens. They get a contract with a governmental entity and they're not ready to undertake it. And it actually puts them out of business. So we had to guard against that. And so we took a total of 58 firms through in 3 different cohorts through 6 weeks of programming. We talked to them about access to capital. We had people from the city actually come in from the Charlotte Business Inclusion Procurement Office, come in, talk about what contracting with the city was like. And we also, I talked about the multi-level partnership. So we ran the program at Johnson C. Smith University, that's Charlotte's historically Black college and university. We were funded by JP Morgan Chase to do the program. Carolina Small Business Development Fund provided access to capital. And obviously we partnered with the city of Charlotte, and we were doing one-on-one counseling and mentoring. Program results, you could see the graduates, 3 different cohorts. 80% of the participants registered as a vendor with the city. Graduates anticipated that their revenues would increase by over 247,000. Oh, am I behind still? I'm sorry. Oh, sorry. Thank you. And you can see the program results there, and also the survey statements from participants, right? So a lot of them agreed that their professional and business social connections had increased since entering the program. They had new opportunities to expand businesses since entering, and that they felt more confident about managing their businesses. So even their perceptions and their confidence. And another really important part of capital, social capital. We can give financial capital, we can provide knowledge capital through technical assistance, but also social capital, how they network with each other and got a chance to network with folks at the city. Another specific initiative is Programa Empresarial Latino, or our Latino program, which is a statewide effort really to engage a Hispanic potential and existing borrowers. So in our first 5 years of lending, we saw that we had done 11 loans to Hispanic borrowers. I'm going to get to a slide in a second that shows the impact of this program and the intentionality of it. But why did we have to start this? Well, in North Carolina, roughly had 75,000 people, Hispanic individuals in 1990. By 2010, that number had increased to over 800,000. In 2020, it was over 1 million. So we needed a program that was intentional about reaching this population in a culturally competent way. We made sure that we had, the time, at least 4 bilingual staff. But we really wanted to deliver that technical assistance in a way that really spoke to this population and really met them where they were. And we wanted to address the inability to meet loan requirements, the lack of business skills, financial literacy, language barriers, and cultural awareness. And so I mentioned we did 11 loans in our first 5 years of lending to Hispanic borrowers. In the last 5 years since starting this program, we've done 94. So a 900% impact. And you can see the job creation, retention numbers, the numbers who've gotten coaching, and the hours, the number of participants who've attended even virtual type workshops, and the number of events we've done. And then also some more numbers about how the contact hours per client and so forth. And during the pandemic in particular, 52 Hispanic firms received COVID-19 loans. And so just a few examples of who we've helped, talking about the outputs, the widgets is one way to tell the story, but actually telling the story of financial assistance recipients is important too. And so you can see across industries, we have a Black female-owned counseling firm, and then we have a Hispanic-owned art stone design, so in the construction-related trades. And with that, happy to take questions. Appreciate your attention this morning. Yes, sir.
So you work with your regional Black chambers already?
So we have generally, we get our information out to the Charlotte Mecklenburg Black Chamber. We sit on a group with the Durham Black Chamber. So there are a number around the state with whom we partner.
So should there not be an integral part of your outreach there for Black businesses? And it doesn't seem like you're a strong independent.
Well, I apologize for the flenching. The answer to the question as directly as I can. We partnered. I was
hoping that there would be a greater resource to you, is what I'm saying.
Well, they are. If you're asking if we have a contractual relationship.
No.
So here's the relationship we have with them. We sit on, for example, the Durham Small Business Advisory Committee with the Greater Durham Black Chamber of Commerce. Mm-hmm. And so when we have programs, we manage the Durham grant and loan funds. Mm-hmm. And so when we have capital that we want to get out to Durham, we tell the Greater Durham Black Chamber about it. Tell your members, please send them our way. We do that with the Charlotte Mecklenburg Black Chamber of Commerce as well. Those are the two most significant Black chambers.
Right. And they're part of the United States Black Chamber of Commerce, which we are. We're a statewide organization.
Okay.
And we support 9 Black chambers here in Louisiana.
Okay.
So thank you.
Yeah, well, maybe we can talk about how you would suggest, we partner.
Yeah, I just thought
That's
you were going to give a
intentional.
big raw, I was looking for that.
He did. It was a low rock.
It's a low.
It was a low rod.
It's
It was
I
like
didn't
a
want to.
field goal instead of a touchdown,
I got to clearly. We have to figure out this Hail Mary.
We got to do this, man.
Very good.
Thank
you. Any other comments, reactions here in terms?
Yeah, I have a
Please, Brenda.
question, Kevin. Were you working a part of the North Carolina 1.0 with SSBCI?
We were, even though it preceded me being with the organization, I know that we took advantage of the loan guarantee facility that was part of it.
Okay.
We may have gotten some debt capital as well, and possibly operating capital, I'm not sure. But I know we still have loans in our portfolio that are part of that guarantee.
And I guess even more than my question is and it may have been before you joined them, but was there an effort on, I guess, whose rules did you play by? Or were the SSBCI or the state or the entity that provided the funds to you, did they also provide you the guidelines for which you needed to operate? Or did the CDFI operate with its own guidelines that maybe mirrored what was the 1.0? Making sense?
What I think, what? Let me look at
Yeah.
I'm gonna phone a friend because
I love that. Yes.
I'm going to
That's
ask.
awesome.
I'm going to ask Amanda Sorrells to unmute herself. There she is. Because Amanda is a veteran of the Rural Center, which is the intermediary that handle SSBCI, and she can speak to this directly.
Right.
Amanda.
Hi. Can everybody hear me okay?
Technology. That's awesome.
Okay, great. Yeah, so going back to your question, so with Carolina Small Business, how our funds came through was through Commerce and then through the Rural Center. So the CDFIs that we partnered with played by the Rural Center's rules. So the regulations and stuff that Commerce had put together, there was loan participation, the CAP program, and they had to work with the regulations and what we had put together with the state of Commerce. So if that answers your questions.
Yes, it does. We in Louisiana did not have take advantage of including the CDFIs in 1.0, but that's certainly a portion that we will take care of. We'll do this time.
And that was one of the biggest, I will say, with the Rural Center and Carolina Small Business was the biggest supporter, especially with the loan participation program. So I don't know if regulations are different with 2.0, but I do know that CDFIs were the biggest supporter of SSBCI with the Rural Center and the regulations that they put together.
Okay. All right. Thank you.
You're welcome.
That's awesome. The ability to leverage not treasury, but technology to phone a friend. Thank you, Amanda. Thank you.
Thank you, friend.
You're welcome. Anytime, teammate.
So I'm curious if there's any other comments from folks virtually, or even here at the Innovation Center. So this topic is extremely important, folks. I mean, we've been trying to tackle how we're going to support underserved or deserving communities. Pardon me. I'm going to stop using that word underserved. We are not underserved. We are deserving communities. And so I think it's very important, while we have the community here virtually and even here in person, as we continue to have this conversation as to how equity, debt, other actors of the entrepreneurial system are looking to provide technical assistance, access to capital, and the like to the most deserving communities. It isn't so much a question of why, right? It's a matter of understanding those systems that have been in place, right? And so to the extent folks are comfortable about talking about that while we have a little bit of time, I'm really curious to hear from all of you, because we're all here and we're trying to tackle these issues that have been in place for, for a long time, for a very long time. And so if it weren't for the opportunity I had at Treasury to understand how all of you in this room and even up there on that matrix are looking to deploy capital for SSBCI 1.0, M Street X would not be here and trying to support you all with 2.0, right? Understanding that this is bigger than just one state. This is bigger than just one community. This is a collective effort. We must think big, we must think bold. And to Sandy's point, there's a lot of money out there. And I said it yesterday, there's a lot of resources. We have to understand how to leverage it, and we have to work collectively and collaboratively together as a team, as a community. And to Sandy's point, we may not ever see this amount of money coming from the federal sector ever again, and even at the state. We must collectively work together.
So David,
Please.
I would offer one thing. So I guess I differ slightly, because I think the communities that we're talking about here are underserved and deserving. I think they're both. I think the data reflect that there have just been, a very disproportionately low injections and investment of capital into certain geographies and with certain groups, because the impetus for CDFIs wouldn't be there if that weren't the case, right? So, but I do think to your point about the collective nature of it, I think that federal agencies, in terms of their innovation, I talked about in the presentation some examples of intentionality relative to federal policy, and that needs to continue. And the collective sort of effort and us kind of sharing best practices and looking at how things are working in our individual communities, but then also one individual community here and another and another and another and another will hopefully create the groundswell for federal agencies to keep being intentional about keeping programs going like this, not being reactive because of the Great Recession or because of a pandemic, but really recognizing like this actually works to stimulate the economies in ways we hadn't thought to do. Yeah. So SSBCI shouldn't just be a 5-year initiative or a 10-year initiative and then sunset. Should actually be the way we do business.
So I would jump in on the systems question and say that the system just has to be willing to do some different things. Do the same thing the same way, you're going to get the same result.
Yep.
And I've heard wonderful descriptions here of good programs, but they're the same programs. So this is where I would say we really have to push in this one-time opportunity. The state that's got 10 programs, my sister here who says maybe we need 10 in Louisiana, that's the kind of thing that has to happen. I mean, as private equity investors, one of the things that we do every single day is to structure the investment in a way that is going to get the outcome that the entrepreneur wants and the one that we want. That entrepreneur wants to grow, wants to stabilize, wants to grow, wants to make money, so do we. So that requires us to have a certain level of constant resiliency. Resiliency is not the right word. Constant adaptability in order to make that work. And I think that's tough for government. And I say that with loving respect. I started my career in government and really think that none of us would have mail if there weren't for good government. All right. But that's what I think the system has to do. And the states have the opportunity to really, 9 years, it's a long window, guys. It's a lot of money. It's a lot of opportunity to try new and different stuff. Really, the experts are in this room. You're the experts. There are other experts out there. And I will stop here around this. For instance, equity investing. How many times on investment committee and our firm do I hear us talking about a firm that thinks they want a debt solution when in fact they don't need a debt solution? They cannot take on any more debt. I don't care how you guarantee it. I don't care how you loan it. They really do not. They need an equity partner whose shoulder goes to the wheel with them. They will be treated and advised and supported like you do in the regular private equity market. There's somebody going to go on your board that's going to help you figure out that you need a new CFO if you want to grow. And so here's an opportunity. But those companies don't want equity, particularly SEDI. Remember I said this success is going to be SEDI success because they don't trust equity. They don't understand it. They live in a world. I'm never going to give up any of my ownership. All the folks in equity are white. They look like my partner, Michael. They don't look like me for the most part. So they have no reason to trust. So here's an opportunity to create a whole new synergy around a tool that small businesses, SEDI businesses need to come to understand so that they can parlay it into their dreams. So that's what I think systemically, there's just got to be a real big leap into new things and get your wings on the way down. You flap hard enough, you will not hit the ground.
Go ahead, Mike.
Talk about, does this ever happen again? I hadn't thought about it until y'all started talking about it, but SSBCI 1 was a reaction to the debt crisis. SSBCI 2 was a reaction to COVID / expansion here, but it's a tool. And if you think about what is so flexible that to some point it gets a little confused. So it's sort of a tool for states to work in economic development. I don't know if that's a message that works long term for a sustainability program, but the SEDI aspect of it may very well be. And so I would challenge practitioners in the space and states to think about that. And if there could be documented, proven success in that area, does this become another long-term program, sort of like the market tax credit program, which was sitting in a very similar situation back in the early 2000s, where I think they had 5 years of allocations, and then the industry did a very good job of showing what the power of that capital could do, what it was doing, tracking metrics, getting organizations together that talked about what they had done, being able to report that back to Congress and say, hey, this is a tool that's working in the communities. And I think that might be an area with that segment, a targeted segment of the economy, where this could be something that you could go back and argue that this ought to be something that gets reauthorized on a normal basis and let states experiments to target these businesses. I'm not sure you get that for a broad economic development. They'll say, well, we have the SBA, we've got we've got the SBICs, we got all that kind of stuff. We already do that. But maybe on this targeted basis, it could be a source for a long-term home for it.
Jason?
Well, speaking of long-term operations and new markets, I'm curious if there are maybe lessons that companies like Advantaged or Enhanced or Stonehenge has learned from years of running CAPCOs and state new markets tax credit programs, and maybe the way that some of those were perceived by state partners, and how you might approach SSBCI 2.0 differently.
Yeah, I think I talked some about that yesterday, about sort of structuring how you can use some of those techniques that may allow you to do some more of the targeted investing. It's communication. It's documenting what you do. It's tracking your success. Part of the reason that Sandy is with us is that we didn't do a very good job of doing that. And Sandy can sort of talk to that. We had successes and stories, but we weren't telling them in a very good in a very good way. So I think if you're looking at, and New Markets actually did that very well after a while. I don't think they did it great at the beginning, but then after a while, as an industry started to get better at that, is getting the 200 different CDEs that are out there doing things like that to tell people what they were doing and how those impacts, and having some sort of common identifiable metrics that we can go to and saying, these are creating jobs in this community. Where? Give us a map, like we can go into Congress and say, these are where things are happening. But I think it is, in terms of running a private investment fund, the last thing you want to do is deal with regulators or deal with anything on the outside. And that's why I talked a little bit yesterday about looking for managers who have that experience, who have some background in doing that, and that's not a, that they don't run away from that. That actually they can actually embrace that in a way and understand that's part of the mission, understand that the state is as big of a stakeholder as any other investor that they have, and that they have different concerns that way. So that mindset when you're picking a manager is important to look for.
Very good. I know Steve has a comment. Steve, can you? I think you wanted to share something just real quickly.
Yeah, I'm glad everyone started talking. It kind of got me fired up a little bit.
That's what we're trying to do.
Yeah. I mean, I like what Sandy's saying. The system has to be disrupted. You know, I've been doing this now. I never thought I'd be doing this for 17 years, but federal programs are not, their systems, it's like they tighten them. This is the most innovative, SSBCI is the most innovative piece of federal program I've ever seen. In terms of flexibility. The only thing I've ever, I've been 17 years, that's multiple administrations. The only thing that ever changes with USDA and SBA and those types of organizations is who they appoint at the top. They're not changing their system. And I really believe the only way the systems can be changed is at the bottom up. And because obviously top down does not work in changing a system. I'm going to share a little later about some of the, on a film that we did. And one of the, I asked one of the ladies in the film, what does hate look like? And she said, systems. And she said, systems that seem so normal, but aren't built for people that look like me. And if we just say, we can't say we need to just prove it in the current system. We have to push to try and change the system. That's my thought on it.
Steve, thank you. Let's pin it there just because we're running about 15 minutes behind. And I know KG Charles Harris from San Francisco has joined us. He's on right now. KG, good morning.
Hi, good morning.
Let me ask you, do we have time to take a quick 5-minute break or?
Absolutely.
Okay, so folks, those who are online on Zoom, we're gonna take a quick 5-minute break and we will start up immediately at 10:37 Central Standard Time. So KG, that will be 8:37 Pacific Time. We will see you shortly.
Thank you.
Okay. Hello. Good morning. I hope everyone is well. And for those who are just joining us, welcome to the pop-up. So as we get settled down here, I'm going to bring in KG Charles Harris. Good morning, KG.
Good morning. How are you?
I'm good, man. I'm good. Good to see you. We're going to hear from you and also Jimmy Roussel from the New Orleans Startup Fund. Talk about SSBCI 1.0, but also we want to hear your success story and what you're doing currently. Before we do that, if I can ask the folks inside of the Innovation Center, as you can see, we're extremely busy here in New Orleans, KG. We wish you were here.
I wish I was too.
We wish you were here, man. In fact, we wish everyone was here joining us, but thanks to technology, we can be there with you. So that being said, I'm going to ask folks to find their seats. We can have conversations afterwards. Oh, you are good, Ann. You are good. It's nice to see. Yeah, Trish, I see that. Or Cheryl with the coffee. Yes, that's right. We have to stay caffeinated. Definitely. All righty. So first of all, again, thank you everyone who was on screen virtually. And of course, thank you. As we continue on this track on inclusive entrepreneurship, I think it's important to talk about place-based entrepreneurs and also actors within the entrepreneurial ecosystem and also funds that support small businesses and entrepreneurs, specifically entrepreneurs of color. That being said, with SSBCI 1.0, Louisiana partnered with the New Orleans Startup Fund. And we're super excited that we get to hear from Jimmy Roussel, the CEO of the Startup Fund, and also KG Charles Harris in the Bay Area. Yes, all righty, Jimmy.
Yeah, so thank you for having me. I'm the CEO of the New Orleans Startup Fund. We are a 501c3 evergreen venture fund that focuses on the 10 parish region around the New Orleans metro area. We sit under the umbrella of Greater New Orleans, Inc., which is the economic development arm of the city of New Orleans or the region. The fund was started in about 2011. It was seeded with $2 million of SSBCI funds, I guess version 1.0. We matched it with $1 million of private donations. We have deployed about $2.4 million because we deployed a little bit more that we've recycled through exits into 56 companies. Those 56 companies have raised $156 million of follow-on investment as of the end of last year. So kind of a 56-to-1 ratio there, if you think of it in leverage terms. 50% of our entrepreneurs of color, 40% are women. We have a string of good news this year. I should start off with the bad news, I guess. 13 of those companies have died. About 5 of them are zombies and really not going that much further. But we've also had now, I signed the paperwork this morning on our 7th exit. So we are now cycling that money back through the community. Our 6th exit was the biggest tech deal in Louisiana, a $500 million exit about 2 months ago, only to be superseded by a $1.1 billion exit a couple weeks later. So we were king of the hills for a couple of weeks. That was good. And so it's been a really positive experience for us. We have made a very concerted effort to have a broad entrepreneur base. So we've partnered with the Black Chamber, New Orleans Black Chamber, and some other local incubators, accelerators, service providers to build awareness that the fund exists. We are the very first check in almost every deal we do. So we're the friends and family you may not have. And so we also play a role of matchmaker between the angel community, the investor community, and the entrepreneurs, trying to open the right doors for them, put together the right syndicates. And our job is kind of a pass the baton to get them ready for the angel community, then pass the baton into the Series A. So, you know, we've had a mixed bag. We made some mistakes early. We've kind of figured out the winning recipe, and now the fund pretty much runs on autopilot. We do about 8 to 12 deals a year. We've made about 85 total investments across 56 companies. So we will follow on in the right situations, usually as funding permits. I think that's probably a good place to pause. KG is one of our rock star CEOs, so he can tell you about our role with him.
I think that you're being very kind, Jimmy, when you say that I'm a rock star CEO. I think that I'm a CEO who dreams of being a rock star. Let's put it that way. For us, the New Orleans Startup Fund was a seminal. Without them, we wouldn't exist. We would have struggled, and which we have done anyway, but we would have struggled and not been able to build the basic platform to actually become successful. And it's really, I would say, thanks to the New Orleans Startup Fund and the New Orleans ecosystem that we got the wind in our backs to be able to achieve what we're now achieving. It began with the fact that they actually attracted me into New Orleans through a conference called the Power Moves NOLA. They effectively recruited a number of African-American CEOs and entrepreneurs from around the country to come down there and visit. And the experience was so good that I said, wow, this is fantastic. I am actually going to pick up myself and move down there, which I did. And then step by step, I built a team. And we had a little bit of a different model where we built a team that was largely remote, because the kinds of people we were looking for were very specialized in terms of deep technology. And despite that, Jimmy and his crowd decided to back us with a couple of infusions of capital, which led to us being able to solve some very difficult problems in terms of science, create a technology approach once we solve the science, and then build a platform which we're now in the process of productizing, starting in financial services and insurance. As a consequence also of what they did, we actually became a partner to Salesforce, ended up being incubated by Salesforce, and are now launching our first product together with Salesforce and a couple of their partners like Silverline and Accenture. So we've been able to do this, and we've been able to be visionary on a level that is usually not possible to be visionary for, thanks to Jimmy and your compatriots. So thank you, Jimmy.
You're welcome.
Thank you, KG. So this is a very interesting relationship. So I met KG not through LED or SSBCI when I was at SSBCI back in 2011 to 2017, but I met KG through my attorney, who was in Berkeley, California. And so being an entrepreneur now and being a man of color and understanding, thinking that I could take lessons learned from SSBCI and apply them in the private sector, there was a lot of pain points. And so my attorney, who may be KG's attorney as well, KG, I don't know, no, just a friend, said, Dave, I think you need to be connected with KG Harris. He's been doing some amazing things. And so as a man of color, talking with KG, it was so inspiring to hear his story. But then kind of, taking it back a couple more levels, understanding that he was part of the New Orleans Startup Fund. And I'm like, KG, I think I know you from something. I'm like, I was at SSBCI during that time that I believe the Startup Fund funded you. So the opportunity for me to talk with you is so inspiring because we aspire to be like you, my friend. And so I'm so grateful to have that connectivity and understanding that there's so many pieces of this puzzle, and understanding all of the pain points that an entrepreneur goes through. And even what Sandy said, we need to listen to the entrepreneur and understanding what their needs are and how to meet them. And I think that's key. And so, KG, as we have you here for another couple of minutes, I'm going to keep us on track here. Understanding what you went through years ago, understanding where you are now, you're now partnering with Salesforce. What advice would you give to entrepreneurs and to state economic development agencies that are looking to work with equity firms as they are, on this venture, on this exploration of SSBCI 2.0?
So first of all, you mentioned the racial aspect of this, and I just want to say something that may be counterintuitive. I've actually received more capital from middle-aged and older white guys and women in Mississippi and Louisiana than I have in Silicon Valley. That's point number one. And so as a consequence of that, I think that we look at things with a certain lens and we think about things in particular ways, right? And I think that the first thing to do is to remove oneself from thinking in the ways that one would be predisposed to think. The second thing I would say is that from an economic development perspective, what we have done and the path we have chosen to take is somewhat different than the average startup takes, because we actually set out to solve some deep scientific problems. It's taken us probably 2 to 3 times the amount of time that the average startup takes to get to the point where we are right now. But the consequence of that is that we have an opportunity that is I would say, in my experience, unique, and why we can get partnerships with the kinds of companies that we're now getting partnerships with, where in 2022, some of the biggest companies in the world both will have Quario inside of it, and also that companies, and I can't say them because I'm on the NDA, but just are going to be putting our product in front of their clients. So that is super exciting for me. It is counterintuitive that the capital to do this came from what you call the Deep South. And the fact that people in New Orleans were willing to think and take the step of investing in a guy like me, basically an outsider Black guy, and be able to create that kind of opportunity is unique. So now we're trying to hire as quickly as possible. We're moving as quickly as possible. Our path to profitability is really clear. And all of this has come from, initial investments that we got there. So from the role that Jimmy played, and I would also mention Leslie Jacobs. Those two people were really core in our approach and our ability to actually get off the ground. Part of that was because they actually have an intuitive understanding of entrepreneurship. They actually understand what it is to be an entrepreneur, the amount of risk, the amount of insecurity, and the fact that things cannot be neatly put into different buckets. because the road is being created as we're walking on it. And you take 2 steps forward, 1 step back. Sometimes you take 3 steps forward and 5 steps back. But regardless, that is the process. And being able to get that kind of support for me was not only essential, but it was also unique.
Thank you, KG. Folks, we may have a couple of minutes for questions or comments for KG. So if anyone has any comments here at the Bio Innovation Center, please share them now. Or if folks out there in the metaverse have any comments, reactions. Sure.
It's going to be evergreen so that it'll sort of.
It's evergreen. So our hope is that if there's a second allocation of SSBCI plus our exits, that the fund will truly be evergreen. So we'll be able to throw off enough money through exits that we'll reinvest at the current pace that we are now.
And when you said 85, that's not an annual number that you're looking at?
No, the 85 deals? No, that's over about an 8-year period.
10 a year.
About 10 a year. Yeah.
Very good. Anyone else have any comments?
Sure. Yeah,
Yes.
I just want to second that the New Orleans Startup Fund has really kind of led a paradigm shift here in post-Katrina New Orleans with their ability to quickly deploy capital into early stage companies and to really get it. And we've had the pleasure of partnering with them and syndicating some of the deals that we see at the Bio Innovation Center as well. And what Jimmy will do is take these folks to investors and groups around town and help them partner with them. And so I want to thank Jimmy personally because their operation started a few years before us, and it's really helped us get going from a fund perspective. And we've seen a tangible change in the New Orleans startup community just by having groups like Jimmy's believe in the entrepreneur. So with that, I wanted to ask you just a little bit about the investment committee that you guys have formed and the process for getting a deal approved.
Yeah, this might be useful for people on the phone. So the way our process works is we have 2 groups of people. We have an investment committee that's all volunteer. I screen all the deals personally. I spend an hour on the phone with every entrepreneur. I never look at a deck. I read all the materials ahead of time, but we have an hour-long conversation. I can tell in 15 minutes whether you're sort of right for us or not. But if you're not, we steer you to one of the resources in the community to try to keep you moving along. But if you get past me, you go in front of our investment committee. It's an hour-long presentation, 20 minutes of PowerPoint pitch, 20 minutes of Q&A. We throw you out of the room and talk about you for 20 minutes. And then we make a decision, okay? It's as simple as that. The people who sit on our investment committee are allowed to co-invest alongside of us. Then we have a board, and our board strictly is a fiduciary board that makes sure that we follow our own internal controls, policies, and procedures. They don't second guess our investment decision, but they do make sure that we don't, there's no self-dealing, we don't invest in the wrong type of deals. The people who sit on our board are not allowed, neither them nor their family members are allowed to invest in any deal that we participate in. That way we keep that separation there. And so the people who are active angel investors will go and sit on our investment committee, and our board provides that fiduciary oversight.
I would also add to that, just from the perspective of an entrepreneur, that Jimmy's understanding of my reality makes a difference, and the ability to create a relationship matters a lot in terms of support that the entrepreneur needs. So Jimmy has been instrumental in making introductions in both to investors, but also to potential partners. He has worked hard on our behalf. It's not just getting money.
Very good. Thank you, KG. If there's no more questions, folks, we're going to quickly transition to the next presentation. KG, you are welcome to stay on. I know you were busy out there in California. It's only 9 o'clock in the morning, so we encourage you to stay on because it's always good to see you.
Thank you. It's an honor to have been able to be here, and thank you very much for being willing to have me. Unfortunately, I have to jump. I'm a little bit late for another meeting.
Thank you, man.
Thank you. Bye-bye.
All righty. Super excited about this next conversation. This is from Steve Ratley, Christina Long, and Imogene Harris from Network Kansas. Steve has been very vocal over the last couple of days, so thank you, Steve, for always being willing to share and provide comments. So I'm going to turn it over to the team over at Network Kansas. They're going to talk about the Empower Advisory Board and the Broken Road. Steve?
Thank you, David. Excited to be talking with all of you today. And so we're going to do it in 3 parts. I'm going to kind of give the Network Kansas overview and share a little bit about my own personal journey related to being a filmmaker. And then Christine is going to talk about our work, and then Imogene's going to finish up by talking specifics about our SSBCI numbers. So Christina is an entrepreneur herself. I just want to introduce you to both of them. Christina is an entrepreneur. She's been on contract with us since 2016, and she has a lot of roles with us. She is our inclusive director. She is also our strategic director of a new network that we started this year that she's going to talk about. And then Imogene has been with us since 2013. And Imogene was hired to work on the SSBCI program. She now oversees all of our statewide programs. And both Christina and Imogene make my life a lot better working with them. But before I get started, I have to also mention Clifton Talbert, who is on the call. And I'm going to give you some information, but the first meeting we ever had on inclusivity with the Treasury Department, Clifton facilitated. He also has a book called Who Owns the Ice House? And I'm sure a lot of you have heard about this book, but I'm going to give you some. I asked Eric, I said, Eric, you got to give me some information on, because it's really something that has transformed the culture in Kansas, and in particular in our rural communities, with people being certified to teach the course. And that mindset, that entrepreneurial mindset, we believe is the first thing that has to change in a community. And so if you ever have a chance to either have Clifton speak, or if he is speaking, go hear him, because Clifton, you're awesome. I don't know if you want to make any comments before I get started.
Myself, I just want to say thank you. It's a great opportunity to watch this collection of people, because at the end of the day, community works. Silos can build bridges and put a swing on the front porch, a light in the window, and be welcoming to all. And I see great things happening because of the connectivity that is being brought together, and what men and women can do in order to make the future brighter for all of us. I'm very, very excited. And especially knowing what you guys have done in Kansas is absolutely amazing. You know, reaching beyond your own borders, that's the essence of unselfishness. When unselfishness is the lead, it really accomplishes more than we can imagine.
Thank you, Clifton. David, are we gonna run the PowerPoint, or are you guys gonna do that? I saw it pop up earlier. Christina, do you
now?
Okay.
Are you seeing? The PowerPoint,
I
we
am
can see it.
You can see it? Okay, well, I can, probably because I have the wrong view on my screen, so. But
So,
I will just get started and we'll go through it. So can we move to the second slide and talk? So I just want to talk a little bit about Network Kansas, give you a little bit of an overview of kind of who we are and what we do. Network Kansas, our vision statement, and something that we have wrote in the first 30 days of operation in 2005 that we still adhere to is, and has grown over the years, is the vision of making entrepreneurship a priority, not just for economic development, but for community development. And since 2005 to now, I think that all of us are seeing how important that is and how it is actually starting to change, where entrepreneurship is now a significant part of that. Our mission statement has changed once in the last, and it changed 3 months ago when I was speaking at a conference called Radically Rural. And there was one word that we changed in our mission statement. So we do believe in the lanes of work that we work on are trying to get 3 types of resources to entrepreneurs and small businesses: education, expertise, and economic resources. And the old mission statement said that it was to be a central portal. Well, in 17 years of work, and I'm sure all of you would agree, there is no such thing as a central portal. Entrepreneurs go through multiple portals to access resources. So really the key is to create distributed networks of resources. And so at Network Kansas, we focus on that. And so can we go to the next slide? So our organizational structure, we're a 501c3 public charity. We really work through 2 networks in Kansas. We work through a partner network of over 550 partners that provide business, they're nonprofit government sector resources that provide business building services to entrepreneurs and small businesses. If you all were in Kansas, you would be part of that network providing services to entrepreneurs. And our job is to try and connect those entrepreneurs to resources. We also have a more what we consider our kind of our transformative approach, which is to work through what we call entrepreneurship communities. And these are communities across the state that have their own leadership team, that have their own financial review board, that make decisions not just on entrepreneurship programs, but also on matching loans to that's basically our assets they're making decisions on. And to just give you a few of the numbers, we've done about a little over 1,350 loans in our history. So our average size loans about 38,000. We leverage another 300 to 350,000 in capital. We try and fit in that gap. And the first gap that we worked on was the capital gap. Christine is going to talk about another gap that we are working on now. And then we have done venture investments too. The venture investments were all SSBCI. The loan is not just SSBCI, it's other loan funds that we have had and used as well. And so we are, I like to say it this way, we are like a CDFI without the benefit of getting the money from Treasury, but we also don't have the restrictions of being regulated. And so we have the opportunity to have a blank slate when we're creating programs, which I think is a great advantage. So can we go to the next slide? So as we talk about our journey, my hobby is acting and filmmaking. And the last year, actually, we've been working on this idea for several years. We shot a film called The Broken Road. And I want to just show a little the trailer for it. And by the way, I'll put my email address if you would like to see the full version. I'd be happy to email it to you. It's kind of on the film festival circuit right now. But I'd like to show the trailer and then give you a few impressions of what I learned through the making of this film. So can we go to the next slide and show the trailer?
Hate is ugly.
There's loud hate and then there's silent hate. What do you want? Justice. Why me? Because it's your fault.
I believe the more that you talk and you listen, then there's hope.
Now go. It's time.
Thank you. Well, it never seems to quite work right when we're when we're showing it on the screen. But I would say that that I learned a lot by making this film, and some of the things that I've learned is that that as a white person who has influence over a lot of assets, that I need to be intentional about co-creating with my friends, with relationships, with minority organizations. The other thing I learned is that the systems, you know, I mentioned earlier, one of the comments from the film was that systems have inherent issues, and those inherent issues still exist, and we have a long way to go. And I want to be part of a solution, working with our partners, not creating solutions and then giving them to people. And I think that's a key difference, is that when we're working with our friends, our partners in minority organizations and women-led organizations, that we need to co-create solutions. And with that, I'll turn it over to Christina.
Thank you so much, Steve. And thank you to each and every one of you all who have been participating in this fantastic gathering. We do appreciate the invitation to be able to come and share a little bit about our take on inclusion in entrepreneurship and economic development and policy, particularly in the landscape of SSBCI. Again, I am Christina Long. I am a key member, I will say, because they've made me feel like a key member of Network Kansas. And as Steve shared, the idea of co-creation, this is not just something that's words or based on, you know, it feels right today, it's not right tomorrow, or based on any kinds of fads or trends. This is the way of Network Kansas. And I have been very honored to be able to sit at the intersection of, again, the people, the policies, and the practices that are coming into formation to be able to make progress in this area of inclusion and entrepreneurship, and then also translating intention into action. Last summer, Steve, myself, and several others with Network Kansas really looked at the benefit that we have from having such a large network. There's more than 500 partners with Network Kansas. And one thing that we have the privilege of being involved in is involved in multiple conversations. But what happens when we bring together those different industry sectors, those clusters, those organizations that are filled with what we call do-gooders, those do-gooders who are so mission-oriented, but who may not be aware of resources that are actually in play in order to make bold changes for the good in their communities. And what we ended up creating is a loosely called network of networks called Networked. It's the Network Partnership for Community Investment. And our mission is key and our mission is critical. Our mission states this: connecting unconnected networks and closing gaps between people, information, and assets to develop pathways that boldly solve community challenges. Keyword: boldly solve community challenges, because we can talk all day. We can committee things all day. It's about making changes that boldly solve these ongoing community issues. Next slide, please. And so as we looked at bringing together more people, more organizations around topics such as access to healthy foods, such as how do we get more inclusion in entrepreneurship? What does it look like to build the capacity of minority-led organizations? Network Kansas took a look internally, because you can't do this work just talking externally. You have to take internal inventory. And in doing so, Network Kansas realized they have an opportunity to do more than being inclusive in programs, but really, how are we creating equity in our assets and resources? How are we sharing power in decision-making in order to make sure we are an inclusive organization that's able to model to others best practices, lessons learned, challenges overcome, challenges going through as it relates to building inclusion? And that is where Network Kansas was able to look at creating a new resource, capital, for minority entrepreneurs who may not have been able to participate in other Network Kansas loan funds, some of them seeded with SSBCI funds, because they couldn't qualify for match. Some of these existing funds were matching funds. So you had to, as a potential borrower, already qualify for traditional types of capital before being able to be considered for many of Network Kansas's, or some of Network Kansas's programs. And so in that, the discovery, the identification, and then the problem solving, Network Kansas created the Empower Loan Fund that is being piloted in 4 communities right now in Kansas. That is a no match fund that's specific to minority business enterprises. And not only did they just create the fund, but they created an Empower Advisory Board made up of thought leaders, of practitioners, of subject matter experts in diversity, equity, and inclusion, and inclusive entrepreneurship and ecosystem building. And this advisory board is looking at the best practices, the guidance around making sure that the Empower loan does exactly what it's supposed to do as a fund, that we're not creating any undue challenges or things of that nature from those borrowers who are finding relief in the fund. In doing so, they're helping to set context as to, yes, as capital holders, we have to be able to make solid underwriting and loan analysis decisions. But if we're truly looking at being inclusive, then in doing so, it may not look like the typical underwriting process. And to make sure that we're educating and empowering our communities to understand, if these applicants could qualify through traditional lending funds, then they would do so. We're looking at it differently, and it's okay to do so. So this group of leaders and champions, we're meeting monthly to identify not only best practices around the loan fund, but in looking at Network Kansas as an organization. These are thought leaders who will be sharing their thoughts and their resources and help guiding our organization to be brilliant in the work that we are looking forward to accomplishing. Next slide, please. And so in terms of their actual scope of work, because again, you can call people together, but we want to be clear about what we're trying to do. They will be providing guidance on the Empower Loan Fund, as I shared before. They're going to be looking at Network Kansas, helping to advise the organization as we too build out a supplier diversity program. Network Kansas does a lot across the state, and they're looking now at how do we look and see who we're doing business with and creating pathways for easier access so that we can grow a more inclusive subcontractor base as well and vendor base as well. And then inclusive entrepreneurship just as a whole. There's many different ways to tackle this very topic, but again, how are we aware? And then what are we doing to drive that awareness in terms of making practices that are sustainable, that make true progress in this issue? A rising tide, they say, lifts all boats. And so there is an economic imperative in being inclusive in entrepreneurship as well. Next slide. And so these are a couple of our initial borrowers who were approved in the Wichita area from the Empower Loan. We're not looking at one industry specific. Here we have a young lady who is living out her mother's dream in honor of her mother by having a Home Plus named after her mother. We have an accounting firm that was able to qualify for Empower Loan Funds. And we also have a media firm that was able to qualify for Empower Loan Funds. The key to this though is not just releasing capital, but also surrounding these borrowers with technical assistance so that they can can go deeper and further in their entrepreneurship journey by having access to business development solutions that work, and resources and mentors and guidance to help coach them to play from a strong position as minority businesses. Next slide, please. We've been able to do that with the help of wonderful sponsors such as Blue Cross and Blue Shield of Kansas, the Kansas Health Foundation, and many others who are contributing to this. So what we are learning as it relates to this work, and again, learning is key. There are subject matter experts, but if you're willing to evolve in this work, we are all on a journey of learning. Lessons learned, you have to set your context early and often within your organization, internally and externally. If the folks inside your organization don't buy into what's happening with inclusion and your inclusive imperative, then that is a missed opportunity. So make sure internally and externally alignment is there. Secondly, equip your organization to speak to opposing views. We're all at different points in this journey, and with different tools and resources. If we're looking at making sure equitable access exists, even in SSBCI distributions, then we need to make sure that our organizations are equipped to talk to those and speak against those who may have the opposing views, to educate. They might not even be opposing out of controversy, but just to educate. Assuming the risk, we don't want to be reckless in the distribution of funds just for the sake of being inclusive. That does harm as well. We don't want to do harm. So we need to understand the risk and assume tolerable risk in this. We need to embrace the learning along the way. And in doing so, we need to extend grace and receive grace in this space as well. And lastly, we've got to hold to purpose. There will be challenges, there will be learning that must occur, but we must hold to purpose if we are going to make progress over the long haul in sustainable ways. Next slide. And so with that, I will hand it off to my wonderful colleague, Imogene, who will talk about the SSBCI connection with all of this. Thank you.
Yeah, thank you. Thank you, Christina. I think you can all probably tell why we love having her as a key partner, or maybe even employee with Network Kansas. So thanks again, Christina. And we can go ahead and go to the next slide, I think. Yeah, so thank you. So just kind of a summary of what Kansas did with our first round, or SSBCI 1. So in 2010, we just focused on 2 of the programs that you could do. We established a loan participation fund, and then also a venture fund. We created what we call our Kansas Capital Multiplier Loan Fund. We in total had about $13.2 million that went to Kansas. We put about 8.9 of that into the loan fund, and then the remaining like 3.9 into to establish that venture fund. And what we did is we actually built that required 10-to-1 match into each program. So really like project by project, we just said, okay, we're always going to have that 10-to-1 match. So that's, we're going to talk about it a little bit. That's kind of a key learning point here too. So that's what we started with. That way we could just meet that requirement and have that ratio built right in to each project. A couple years later, after having the program going for a couple years, we decided that we wanted to have something more targeted to minority and women businesses. So we created our Minority and Women Business Multiplier Loan Fund. This offered a higher match percentage, right? So we said, hey, if we are allowed to sort of have this portfolio approach, Treasury's okay with that. We really feel like we're exceeding it with our loan and venture, so we're comfortable bumping up the match for this particular populations and communities. So with that, to date, we were recycling those funds before the end of the program. We have now done about $15.5 million in loans since 2010, leveraging another over $200 million in private capital. And then in our venture fund, again, we've been able to recycle some of those investments that have come back or successful exits. So that's about 5.1 million we've done, and leveraging another 97 million. When you actually do look at that ratio or the percentage, our loan fund, we're only usually like 6% of the deal, like as a whole, since the beginning of time, or since 2010 anyway, maybe not the beginning of time. And then in our venture fund, it's even a little bit smaller, with just being 5% of those deals. So that's sort of what it looked like in SSBCI 1. And if you can go to the next slide. Okay, yeah, so lessons learned. I really enjoyed that point Christina said, embrace the learning. And I think that's true in anything you're doing. You need to embrace the learning, always be learning. So one of the big lessons we learned is that we actually kind of had a low usage of our minority and women business loan fund. You know, it's not always an Iowa cornfield. If you build it, people don't always come. And this could have been, maybe we didn't co-create it very well with other people. Maybe our network could have been a little more robust. I mean, I think there's a lot of variables we can go back and look at. But when you look at it, it was, we had 28 loans that came through there. It was predominantly women-owned businesses, which is great. But I think our intent was to reach more of the minority businesses as well. And we just didn't really see that happen as much as we would have liked. So you can see there, it was about $2.6 million we did in loans, so about 17% of our total loan portfolio. Yeah, so the next one is looking at, we said, okay, like I said, we built in that 10-to-1 project by project. And as we were looking at SSBCI 2, we thought this is an opportunity to change our behavior, to change these programs and see if we can be a little bit more playful, to be a little bit more accessible to more small businesses in Kansas. So next slide. So I do want to note that Network Kansas hasn't been confirmed as the managing organization. This is just, you know, the plans are still pending, but this is what we would, you know, we're looking at right now that we would like to see that we could help implement in Kansas. So we would like to see a variety of loan programs. We're not looking at least not right now, we're not looking at diving into the other programs that you can access through SSBCI. We're sort of sticking with that loan participation and the venture fund, but we want to sort of be more creative within that space. So building a variety of those programs that can reach a diverse set of entrepreneurs. So for instance, with our loan fund, you know, we can have one that's specific to reaching rural and urban distressed small businesses, one that's just specific to like minority and women businesses again, for certain sectors, you know, and then really what it's doing is creating different sizes of loans. So maybe let's say with the Grow DEI loans, we're okaying a bigger percent of the total package. Maybe we're going to be as much as 80%, let's say, of the total project, but we're going to lower the cap on what we'll be comfortable lending out. You know, so maybe it's only like $25,000 loans as a SSBCI loan. Whereas maybe in the target sector loan program, we could go as high as maybe $1 million, but we're only going to be like, again, that like 9–10% of the match, of the private match. So it's really just creating different sizes of loans, different percentage of that total, because we're going to take that portfolio approach and say, hey, we know we were just really kicking butt and exceeding that ratio, that 10-to-1 ratio. So if we just sort of look at this as a whole, we think we can still do that, even if we're allowing a larger percentage with some of these sort of other loan programs. And then it'll be similar for venture, right? So different matching percentages based on who we're trying to serve with the venture fund. And then also looking at like funds investments. We didn't do any fund to funds last time. So how can we be using this to help build other investment funds in Kansas? And what kind of, again, kind of playful and unique ways we can do that to be serving the variety of entrepreneurs that exist in Kansas, from rural, you know, women, minority, urban distress. Just they all have just a little bit different needs, and we want to be aware of that. So next slide. Okay. Does this go back to somebody? Sorry, I'm forgetting. Steve or Christina?
Yeah, I might just add that taking it as a overall portfolio approach with our, and you know, I was talking to the person who is the consultant for the venture side, and the reason that we did that is Treasury told us, if you say this, we will approve it. And so we did what they said and approved it. This time around, I believe Treasury understands their programs better, and we understand our programs better. And we can really be much more aggressive on startups. We can be more aggressive on, in particular with minority businesses. One of the things that we, our statistics in our metrics show that women-owned businesses, white women-owned businesses, we did very well with. Minority businesses, I considered a failure, even though we tweaked it and tried harder, but we didn't try hard enough. And so I believe that, you know, they would, since they do require bank match on a loan, we want to use that program as an entry point to working with banks. And the program we launched called Empower Loan Fund, which is a no match program. We're kind of modeling it after that. We bumped the number a little. We're doing it in Western Kansas too, with Hispanic entrepreneurs in Liberal Kansas and Dodge City. I think we just funded our first in Dodge City. And Clifton, I might add, we're doing a Hispanic Ice House entrepreneurship program out there now, which is getting lots of enrollment. But I think the key is to, if you can take a portfolio approach of, you know, we're not going to get the match on this, but we're going to get it on this, and reach a broad number of businesses, then we can still hit the 10x number, but also reach out and try new programs that really focus on minority businesses, women-owned businesses, and that's what we're trying to do.
Absolutely. And I might add, if I may, that the reason why we are talking so much in the time that we've been allotted about inclusion and minority-owned businesses is because if we're going to do this right, in terms of being inclusive business building ecosystems and those who really catalyze what's happening in your communities, the minority business work, the inclusion work cannot be separate. It can't be separate. You can be intentional about it, but it cannot and it should not be separate. So even when the opportunity is as great as SSBCI, it belongs there as well.
Yeah, and I'm going to make one more comment about me as a white person. We have a community, we had an entrepreneurship community that we launched 6 or 7 years ago in Wichita, Kansas, specifically for urban distressed areas. Our leadership team now was all African-American leadership team. And we struggled funding minority businesses. And a minority legislator was Melody McCrae Miller, was harping on us about this match issue. And as a old white guy, I'm thinking, no, that you can't do it that way. You can't do it that way. And so during the pandemic, we launched a no match program in Wichita, and I was doing a deal with Christina, and Christina leaned over and said, oh, by the way, we funded 6 minority businesses in 30 days. And I was like, what? And that was the start of the Empower program. Someone like, you have to, as a white person, you have to understand where you came from. And that's, you know, I realized that's a different gap. That's a gap that we struggled with during PPP. If you look at the PPP money, where it went, that was a systems thing. It was a systems problem. And so we have to own our part of the mess. And that's what I wanted to do.
You and everything that you are sharing there at Network Kansas, and specifically your evolution from where Network Kansas was, we'll say 10 years ago, to where you are right now. I see Clifton Talbert there, and I'm just curious, Cliff, as you've been able to witness, observe what we've been talking about over the last day or two. I'm curious to hear your thoughts. We're going to have an opportunity here in a second, folks, to open it up to kind of round this all out and just chat more about what folks are doing specifically with SEDI and feedback and just reactions from this pop-up. But Cliff, as a man of color coming from the deep south of Mississippi, understanding your story, understanding where you are today, what wisdom, what just knowledge can you share with this group on inclusivity and where we are as a nation right now?
Well, first of all, it's very important to understand that in the last couple of days, I've had an opportunity to observe the possibilities that exist. And when possibilities exist, then we have to bring opportunity to address those possibilities and bring them into our lives in order to accomplish something that is meaningful and long-lasting. And in other words, it's like each one of us has the opportunity to create a Mona Lisa. Even though in the 15th century, whatever Leonardo da Vinci was doing, all of those people who were established in the world of art said he was crazy. What he wanted to do could not be done. But he was pursued by his own desire to do something that had not been done before. And as a result of that, some 500 years later, the Louvre, minus COVID-19, is still filled with people in Paris coming to see this small painting that almost didn't happen because money was being made in the Renaissance at that time, and everybody knew the system, and the system was working, but he wanted it to work differently. And there are three things that we need to bring to the table in order to get that difference in place. One is inquisitiveness. That has to become an asset that we embrace. We have to become uncomfortable with being comfortable and ask a lot of questions. If no questions are being asked, there are no answers that are forthcoming. Secondly, we need to accelerate our imagination. Imagination is not just something that got lost when we were 5 years old. Imagination is the mainstay of humanity. Everything that we currently enjoy, the chairs in which you sit, the room in which you're in, all of those things existed first as a whimsical idea or the imagination of someone, and then they brought them together to make it happen. And then thirdly, is don't be afraid to take an introspective journey. It's so important to do an analysis of where we are, who we are, and what we are doing and what we are not doing. Peter Singate said in his book on mental models that all of us, from the day we're born, the trailer pulls up to the crib and we start putting stuff in as others do as well. The challenge is that happens to every human being, but there are those among us who have realized the necessity to do an analysis of what's in my 18-wheeler. Is it good stuff, bad stuff, or stuff I don't need? That is something that we cannot do corporately. We do this individually, and it shows up in a corporate setting in the teams that we currently build together in order to make things happen. I would say in closing that just having this group of people together, to come together, to hear themselves talk, but to look at unselfishness as a guide. Because we are talking about silos. It is easy to be siloed because that is the world of business success. You got yours, I have mine, and I'm going to see where my stock would go as opposed to yours. That's the way we think. But in a world where we are dealing with people and managing the, I would say, the course of their lives to be better than what they currently are, unselfishness becomes a main attribute to bring to the table. Put it right along beside your doctorate, your master's, or your business degree, whatever. Always say, and I have a degree in unselfishness as well, because that changes the dynamic of how we look at others, and more importantly, how we perceive ourselves. Lastly, as I close again, in 1905, a young white guy by the name of Paul Harris in Chicago decided that he wanted 4 of his friends to get together and just meet on a monthly or weekly basis, just for interchange. It was an unselfish desire. That unselfish desire with 4 white guys has now become Rotary International, where millions of men and women around the world of all colors, ethnic groups, and gender come together to really speak to what is possible. So I want to leave you with the idea that every single one of you have the opportunity to do what you haven't done, to achieve what you haven't achieved, and to create a Mona Lisa that they say can't be done.
And I'm going to drop the mic to that. Thank you. So folks, we have some time now to hear from the state. So I'm going to open it up. I'm going to start with LED since you're right here. We've had an interesting couple of days. We've had a very rich, impactful conversation on SSBCI 1.0, innovative strategies, technical assistance, and inclusive entrepreneurship. Thinking back to the last day or so, what are some of the themes that you're going to take back with you as you are looking to recreate, redesign your SSBCI, but also thinking past SSBCI, right? What are those tidbits of knowledge that you're looking at?
Well, it has really been an enjoyable day and a half. Feels like it's 2 days, and it's been really, really good. It's just probably the overarching idea that I will take back to with our team is to not be afraid to look at things, to do things differently. Although we may have some of the same programs that we have maybe originally that we still may have going into the original application that we're going to submit to Treasury, we still have a chance to fix that, by February, and maybe before we have to go through the real modification phase. But the devil's always in the details when you think about how, even if you do the programs, you still have to remember that you still have an opportunity to make some changes. I think the challenge in listening to a lot of, especially with Kansas and some of the other folks who have spoken, they're not state governments. So we have different challenges like some of the others, that we have some things that we have to say, well, will this work for us, or how can we fix that, and do we have enough time, to really do some things? And I think that our outreach will definitely be something that we will do better in 2.0 and beyond. Even though this is a 7 or 10-year program, there are those of us who may not be there 7 or 10 years from now. But the groundwork needs to be laid along with the staff that we have existing, to have that overarching idea of don't be afraid to challenge and make some changes and speak out when you think that there's something that we can do better. We always can do better and do differently. And so to instill that in everyone, to not be afraid to bring up, hey, let's do something a little different. I oftentimes go a different route home because I get tired of going the same way. It might take me another 10, 15 minutes, to get home, but it's kind of like you get tired of going down the same road, seeing the same thing all the time. So I'll just go a different route. But the end result is I'm going to end up at home. So I think we need to look at that when we are looking at all of our programs, that the end result is what we want. And Sandy and other people have indicated, you know, you have to take the challenge and look forward and constantly make those changes, whatever you think you might be. You want to add something?
Yeah, just a few things just to add. And again, Dave, thank you so much for including us in these discussions very early on when we were talking about doing something like this. It was, I think that this all came together within the last 6 weeks, if I had to go back in my calendar. Yeah. But very excited to have been part of it. Very excited to hear from the many states that were represented on the call and on the virtual screen there, here in the room as well. Just a couple of things just to kind of note is one thing that we've done with being a state agency. We often forget that at LED, we act more like a private sector agency than a state government agency. But one thing that we always do is engage our stakeholders. That's one thing that I learned when I came to state government almost 10 years ago, is really engage the stakeholders. And it's everyone involved in that stakeholder, whether it's the entrepreneur, whether it's those that are going to be providing potential financing or venture capital funds. Really involve your stakeholders and listen to them as to what their needs are today. Not what their needs were 10 years ago with first SSBCI, but what their needs are today. It's ever changing. Our communities are ever changing. And so that's what we're doing when we're designing our application for 2.0, is we're listening and we're ensuring that we're going to meet the needs that the community here in Louisiana needs. It may not be the same in your state, but we are going to take what you all have learned in the first phase of SSBCI with your programs, employ some of those within our state here so that we can have more successful programs for our entrepreneurs. We're excited and we're embarking on this journey together. And I think that that's one thing also I'd like to stress is that we've had a sense of community with SSBCI, especially with Dave as our outreach person in the first 10 years of the program, so to speak. But, you know, he and his team are here to support us as we embark on this in the future, as well as, you know, U.S. Treasury will have outreach directors as well. So just remember that we're in this together, and don't be afraid to lean on your counterparts in other states, because they'll probably have already been through some of those potential pitfalls that you could face whenever you roll out your program. So again, trust each other and don't be afraid to ask, and reach out to Brenda, our team at LED, if you have any questions.
Wonderful, wonderful. Thank you, Ann and Brenda. Let me pick on some other folks up there. Steve, I'm not going to pick on you yet, because I know you're always ready, and I appreciate that. Sarah, real quickly, if you're still there, did I see you? I think you're still, yeah, I see you. Just curious to get any feedback from you on what you heard, what you observed. And as Sarah is hopefully teeing up, Cheryl, out there in Virginia, in the Commonwealth.
Yes, I am still here. Let me turn off my little face here. It's chilly in this building, and I need to position my camera.
And you are fine, but I'm just curious. So you are 30 days new in your position. Yeah. So welcome. Wow. You have a lot on your plate, right?
Yes, 30 days this Friday.
Yes. So yeah, just curious, you know, as I don't want to say a new kid on the block. I don't think that's appropriate, but just someone new to this world, if you will, this community. What are your thoughts? What are your...
No, I'm going to embrace that, my reality. And I am new to the block, and I appreciate this forum. The executive director here at Virginia Small Business Financing Authority put me on to M Street X. And so it was pop up, and I'll say, hey, I'm like a a new child, a new preschooler. I'm soaking the paint off the walls. I'm trying to get all I can to do all I can. And this is a brilliant platform. If you all put this together in 6 weeks, it has afforded me the opportunity to network, to grow my professional learning community, and become exposed to people who are close to the work with boots on the ground. And it helps to give me a little comfort to know that you all built your planes while flying, and that you've gone before me and basically given me some tools that I can use. I've reached out to Tim and to many others, and you all have already, some people have already responded to me. And so I plan to watch the broken road and, you know, share it with others. And some of the resources and tools that you all use, I may be very well be reaching out to you to help me establish those best practices here in Virginia. We did not have a CDFI component to SSBCI 1.0. And so to hear you all speak so eloquently about the importance of involving everyone, you know, serving the entire state and making certain to broaden the net and to find the gaps, that's what I will be doing. So you're helping me establish a better presence for SSBC 2.0, and not just to do the old things. You know, hey, I was thinking, let's just do what you all had done for 1.0. We'll just scale it up larger. But you all have given me a little bit more confidence to try to, you know, branch out and do things a little differently and see if we can reach a wider audience and serve more people with SEDIs and women. So I'm encouraged, and I'm more informed than I was 30 days ago. So thank you.
Awesome. Any other states? Wendy in Nevada, or Mindy, pardon me. Do you have any comments? Okay. Steve, Imogene.
I just enjoyed the whole couple of days, and I'm just encouraged that there's so many people with similar values. I think that great policies come out of great values, and I think that there's a lot of states that are in really good shape with this. So we will keep you updated on if we're selected to. You know, like I said, we may not be operating the SSBCI program in Kansas, but we'll keep you updated on that. And I appreciate everything that everyone shared.
Thank you.
I just, sorry, I just wanted to add, just tagging on, somebody said, you know, lean on the other states. I have always found the SSBCI community to be very welcoming, very helpful. So truly, if you're new, if you've been around from last time, if you're just looking to learn anything new, I would say feel comfortable to reach out to anyone. I don't think I've ever been met with a no or a frown with SSBCI. So.
Yep, I echo what my colleagues have said, and I do want to emphasize what Steve said. Good policies come from good values. And so again, beyond it being the right thing to do, to be inclusive, to lean on one another in professional community, it is imperative that we do for the economic good of all. And we really appreciate the platform that you all have given us today to be able to share. Thank you.
Thank you, Christina. We have a couple of more minutes. Curious to hear from the folks that are here as we wrap up. Any thoughts, observations, any big ideas?
I just wanted to say thank you to everybody for taking the time to come here physically and to be present virtually as well. This is our first hybrid conference that we've had at the Bioinnovation Center. And it's been about 18 months or so since we've had people here in our conference room and enjoying our facilities. So this really does mean a lot to us. We hope to see you back here. Please go on our website, social media to keep up with events and things that are taking place here. I'll conclude with that. I agree with the folks that spoke earlier today. This is a major milestone event in United States history, and it's going to be up to the folks running these programs at the state level and on the ground to really make it work for us and for the citizens. So I really appreciate you guys again, and please don't be a stranger.
Any last one? Sandy, Michael, any last one? Okay. Jason?
I mean, Chris had a really nice closing point there. Certainly appreciate you guys opening up the space, and Dave, of course, for inviting me, and Louisiana for sponsoring the event. You know, just to reiterate kind of what I said yesterday, we're very excited by the opportunity. There really aren't other federal programs that provide the same opportunity, particularly on the investment side, or the ability to work with tech-focused and new companies that are, you know, not as well suited for some of the more traditional loan guarantee programs the SBA puts out. So the opportunity here is really great. You know, certainly hoping to see the rules finally soon, you know, hopefully maybe even this week. If for any states that in particular, if you're thinking about putting together investment or other tech-focused programs, happy to talk with anybody. We've been meeting off and on since the word of this program came out with all of our members that run these types of programs, and we'll certainly be doing a ton as soon as it's out there. We do capital analyses for states, trying to help them figure out what's actually happening locally, because again, as I talked about, just making sure you're really identifying what your actual needs are is so critical. As everybody who worked with it the first time around, if you have a program specifically designed to what the actual need is, you're going to get more demand, more use. So it's really important. So if we can be helpful, just let me know.
Awesome. Just real quickly in closing, I want to thank everyone that participated virtually and in person. And what camera am I looking at over here? And also thank you to Ann and Brenda from LED. Thank you, Advantage Capital, for being here. Thank you to my team, Ty and Rabia. I would not be here without you. So thank you all. And of course, to the Bioinnovation Center. Thank you for hosting us. And thank you all out there in hybrid land and the metaverse. We'll call it this metaverse of the community of practice metaverse, or whatever it is. But anyhow, thank you all. Thank you for your participation. Thank you for taking on this journey. And I encourage you to think big and bold, and you all be well and be safe, and see you next time. Have a great day.